Okay, but now I'd like to turn it over to Susan Smith, who is with Beehive Insurance Agency in Utah. Susan, take it away.
Hi, my name is Susan Smith. I work with Beehive Insurance Agency in Lake City, Utah. I specialize in nonprofit insurance. Specifically, I write the insurance for 7 associations nationwide, so you have a lot of association and nonprofit experience. We've created a special E&O product for members of your association, which is something we'll talk about as we go through this. But what I basically want to do with this webinar is just introduce all of you to the basics of insurance, some insurance coverages that an organization needs, to give you some examples of what types of things can happen that would require this insurance. So again, I want to be very hands-on, and as we go forward, if you have questions while we're talking about the different components of insurance, please feel free to pipe up and let me know so that I can make sure that I address everyone's questions as we're going along. I will be using examples of types of claims and things that I have experienced to kind of give you an idea. It usually hits a little closer to home if you can hear the example of the types of things that have happened to others that has required the insurance coverage. So
And this is just
go to the next slide, which is the commercial general liability slide. Commercial general liability is usually the first coverage that I encourage a client to purchase, because this is the coverage that provides bodily injury and property damage for others arising out of your services. This is for third-party liability.
You get a password?
So this is what protects the general public from you and your actions and the things that you may do that may cause injury to someone that really is just a third party. The policy in the general liability form, there's some forms that are also included. Personal injury and advertising injury is other than bodily injury, and that's generally libel, slander, oral or written advertisement. So that's where you get the personal injury. We call it personal injury, but it's libel and slander. The fire damage legal liability is basically fire coverage that it's written into the form, and a lot of times people don't need this coverage, but it's there anyway. If you're renting a premises from a building owner and you burn that building down, they do give you a portion of coverage for the damage to the building for your negligence in burning that down. And then medical payments, and medical payments are kind of an important coverage under the general liability, because the medical payments is where they're going to pay for injuries to the third parties first, and that's going to be regardless of your negligence. So if someone is injured on your premises, a lot of times we think about that as slip and fall, but it's also if you're doing a program, and for instance in this webinar, if Catherine had a bunch of people, actually we were doing a live one, if she had people there and someone tripped over one of the cords and fell and needed stitches, that's where we're going to get coverage for that. They'll pay first under medical payments, because that does not require negligence for them to respond. If you get over that limit, generally the limit's somewhere between $5,000 and $10,000. If you get over that limit, then you have to have some negligence involved for the company to pay. So basically, general liability is the bodily injury and property damage coverage for me causing injuries to third parties. If I'm having an event, for instance, and somehow or another there are picnic tables or something, and someone sits on the picnic table and falls off, I would probably be required to turn that into my insurance company. If you're having an event, picking up trash on the river, and someone comes along and trips over your rake or whatever, that's what we're looking at here is third-party liability. And it's for bodily injury, so this coverage has to be in place in order for any kind of a loss that would have to do with bodily injury or property damage that you cause to others. So what I'm getting at, and as we go along, there's not just one policy that's going to provide all the protection that you need under one policy. It's going to require a couple of different options, and general liability is one that I highly recommend that everybody purchase, because everyone's going to have events and activities, and there needs to be coverage in place for those events and activities in the event that someone's injured. So some of you, and I don't know in this group if there's anyone that does any kind of professional services like consulting or anything along those lines, but professional liability is different from general liability in that a professional liability claim would cause financial, it wouldn't cause injury or damage, it would cause a financial loss. So it's meant for people that are providing professional services. The consulting is one. If you're drawing plans or mapping or anything like that, that would be a professional liability. And a lot of times we can write those in conjunction with the general liability. Sometimes that requires a separate rider. If, as an organization, you work with children or handicapped people or anyone that's a vulnerable population, we oftentimes will quote improper sexual conduct liability. And I don't know, do any of you work with youth groups or anything? I'm guessing that's probably a no, and we're all muted. So if that's the case, that's something that we always consider, because the vulnerable population makes an organization more susceptible to that.
Maybe it was some video. Maybe you had an account already.
Any questions so far? Okay, event coverage is something that I think is important, because I'm guessing that as organizations you'll have fundraisers, or you might have events, cleanup type events that people will attend. That's part of the general liability. You need to make sure that a lot of times if you're having an event at a venue, the venue is going to require that you provide them with a certificate of liability for your general liability. They want to make sure that you've got coverage for whatever you may do at their venue. So anytime you have a conference or something, most likely the venue will ask you for proof of coverage, and this is what they're asking for, is general liability. When we underwrite a general liability policy, what we do is we discuss the types of activities that you're involved in. Someone that's working specifically or most often in an office is going to have a much smaller risk than an organization that's out picking up litter and taking hikes and taking kids on field trips and things like that. So the range of how the pricing and premiums work on general liability are in direct correlation with the risk. So sometimes we're able to get that get the premiums lower if there's not a lot of risk. So we have recently put in a canoe dock. What are the insurance implications of this? Do we need to add or change our insurance company? Ask people to sign a waiver of liability forms. I guess that depends on, does your carrier know that are you using canoes as part of your services that you provide? And if the carrier knows that already, I always think it's a good idea to let the carrier know. As far as the insurance implications, if the carrier is already aware that you're using canoes or that you're on the water, the canoe dock probably won't change anything. But definitely canoeing is one of those types of risks that is a little bit harder to underwrite and generally can be a little more expensive. I do recommend that waivers, and I also have several sample copy of waivers that I would be happy to provide everyone with after the seminar. I've got email addresses, so I've got some great waivers that you can use. And yes, I do recommend that you have, anytime you have participants, if you're doing something where they're participants, volunteers, I would have a waiver signed. And I will provide that waiver either to all of you individually or to Catherine, and she can get that to you. Any other questions on general liability? One thing to consider with your current general liability, when you start the policy with your agent, it's important that you stay in touch with your agent as your services change. I've had a lot of clients. I had one client that had told me that they were providing just fiscal management for community projects, and then somewhere along the line they started doing a community garden, and I wasn't aware of the community garden, and during that time one of the people that was participating in the community garden fell and broke her leg fairly seriously, and when we turned it into the company immediately canceled the insurance because they paid the claim, but they canceled the insurance, non-renewed it, because we were not aware that their services had changed from just office-type services to where they were having people process produce. So it's important that you think about what type of risk you've got and make sure that you clarify that to your agent, because there are some things, anything involving water is something that's going to take, the underwriter will take special note of. So that's something to keep in mind. Okay, we'll move now on to property coverage. Any other questions about general liability? Any claims that anyone can tell us about, or any interesting stories that we can talk about? Like Nancy is typing, so I'll wait for Nancy's statement to come up. This is an interesting question that Nancy poses. Is there liability for listing trail maps? I am hearing more and more about this sort of thing, the Google Maps and people using maps produced by Google and other places that may take people to the places that they're not intending to go. It's barely coming up into the insurance industry. I believe because of the stories and the things that are out there, the insurance policies will likely address that. Negligence is a huge key in general liability, and so if someone's injured due to your negligence, and I suppose that using a map that was not proven to be a map that works could be negligence, and there is a chance the policy would respond. Like I say, I think this is something that's new coming into the insurance world, and I haven't seen policies specifically respond to this yet, but it's coming. I'm sure within the next couple of months we'll be seeing endorsements added to policies that address this specifically. So on listing trail maps, I think it's probably a good idea if you can, if you've used the maps, if you know where they go, to kind of try and verify that the information is correct if that's possible. And if not, I think if you were found negligent, your policy would respond to that. Any other questions on liability, or shall we move to property? If I don't see anyone typing, I'll just start talking on property. Okay, property coverage is generally attached to the general liability, and it obviously provides coverage for bricks and mortar. If you own a building, you need to have your building insured. That's where we'll insure it. Business, personal property, property of others that you might have in your care, custody, and control. One thing I want to mention here is a lot of organizations will start out with just liability, and they'll not be too interested in insuring their contents. Well, we just have a few computers, a couple of desks. It's really not worth insuring. We were donated these items, and so they're not really worth very much. The thing to consider here is that if that property is damaged, if you were to have a fire and lose all of that stuff, there still has to be a replacement for that property. So I think it's important that you cover those things even if they are old, because if they're damaged or destroyed, our policy will pay to replace them with new stuff. So I think people that just generally don't want to worry about their contents, they ought to think about this coverage, because if you lost 5 laptops, whether they were old or not, you'd still need to get new ones, and possibly someone won't donate them a second time. So it may be something that, you know, if you have the insurance company, you can have your items replaced. Property insurance is not ever too expensive. The times that it can get costly is when the, you know, depending on the values, or if you're in a spot that is high risk for fires or water damage or things like that. So depending on where you're at, what location you're in, it's generally not too expensive. Flood and earthquake, I think most people know with all of the things going on now, flood and earthquake are not generally covered under property policy. Those require separate policies. A lot of carriers on the property coverage will have what we call co-insurance clauses written in the policy, which is their way of trying to make sure that we're insuring these items to replacement value. They don't want people to underinsure their property just to get a break in the premium, and so they do require that we either insure for replacement value or somewhere in between, and those co-insurance clauses vary from company to company. So sometimes we can have an 80% co-insurance clause, which means that they want to make sure we've got at least 80% of the full value of those contents insured. That's something just to keep in mind. Look at your current policies and see if there's a co-insurance clause, because that can become very important at the time of a loss if you don't have enough coverage in place. Electronic data processing equipment, that used to be more back in the days. I've been doing this for 20 plus years, and there was a time when computers were new and fax machines and things like that were just starting to come into being. Generally now on a property policy, your things like your fax machines and your computers that are stationary will a lot of times just be included in your contents. But it's something to consider if you have any kind of electronic equipment or mobile equipment. Property in transit is important to think about. If you have anything mobile, your laptops or computers or any type of equipment that you might have that will go from place to place, that's something to consider, because under the property form, property is generally covered only within 1,000 feet of the described premises. So you need to check with your carriers and make sure that there is coverage for those laptops that cover them wherever they're at, that they don't just have to be within 1,000 feet of the premises. A lot of policies will have some little supplemental addition coverages to the policy that will pick up coverage for that, have small limits for property in transit or small limits for computers, things of that nature. One thing, and I don't know how many of you own buildings or have to worry about that, but the co-insurance clause is very important, because the insurance company expects you as an insured to insure your properties for the replacement value. And under insurance, if you're underinsured, if at the end of the day there's a loss and you're underinsured, they will penalize the amount that they pay for the claim for underinsurance. So that's how coinsurance works. I guess the reason why the carriers came up with this coinsurance is because a lot of us may not know what it costs to replace something. And I've got an office full of contents here, and some of them are old. I bought them at prices back in the day, and now I've got new stuff. So I'm coming up with a figure out of my head to try and determine if I had a total loss, what would it cost to replace everything. So in the perfect world, we would know that, and we would say, okay, $100,000 is what it would cost to refurnish my office the way that it was in the event of a total loss. But we may be off. We may not be thinking about certain things, and so they put the coinsurance in there to give us a little cushion in the event that we're off by some. And generally, the two that I've seen are 90% coinsurance, which means that they're going to assume that the $100,000 is at least 90% of the full replacement cost of what I've got, or $80,000, or 80%. So that's something that we do in certain types of policies with the coinsurance. There are other policies, a business owner's policy, for instance, they suspend the coinsurance, and you just insure. They don't have the coinsurance clauses in the business owner's policy. So each policy form is going to be different, but it is important as you're valuing your personal property for insurance purposes that you make sure that you insure it for the value, the replacement value, so that you don't get into any snags with the insurance company. Any other questions on property? Okay, borrowed items, for example, canoes, trucks, etc., if you're borrowing an item from someone, chances are you're going to have to, there needs to be an agreement as to who is insuring that. If I have canoes and I insure my canoes, I probably have them written on an inland marine form, meaning they're covered wherever they're at. So it's all going to boil down to who's expected to insure that property. If they're expecting you to insure that property, then yes, you do need to call your agent and let them know that you'll have a temporary, what they can probably do is increase your coverage or add coverage for property of others, and they can usually insure that just for a short amount of time. But my guess is if you're borrowing it for a short time, one day, that the coverage that the person you're borrowing from has would respond. So you need to make sure you're really clear on when you're borrowing people's canoes or one thing's trucks. If you're borrowing a truck from someone, the insurance follows the vehicle. So the insurance that's on the truck would follow the truck. You just need to make sure that obviously that you have permission to use it. So, and we'll talk about autos as we get into this. We'll talk a little bit more about the issues on auto insurance. But I would definitely, on anything that you were borrowing or using that belongs to somebody else, make sure there's some clarity as to who's expected to cover that. Because there may be limitations on his policy that would preclude him from extending his coverage to you while you're using it. So you need to just make sure that everyone's aware of that type of thing and who's expected to cover it. And then if it comes down to you are expected to cover that, then you'll need to address that with your insurance agent and let them know the value of what it is that you're borrowing and basically that it's a short term. Sometimes they'll charge a little additional premium. Sometimes they won't. They'll just let it go under your content. So that's something you'd need to run by your agent. Okay, I will go to the next slide while auto coverage. Let's see, Terry. Okay, I'm going to jump into automobile coverage and then I'll answer event coverage. Okay, Sally asked about event coverage. How much should we have? Event coverage is general liability. That was the first slide that we talked about. I always write for general liability $1 million each occurrence and $2 million aggregate. I have found that if people are going to ask, if venues are going to ask for coverage, typically they'll ask for at least $1 million worth of coverage and a $2 million aggregate. So that's what I generally will write. We can go higher. I find that different venues have different requirements, but I as a practice, do not write any less than $1 million, $2 million. I feel like that's where it needs to be. Auto coverage, I don't know. There may be some of you that own autos in the organization, and if you do, obviously you need to insure those on an auto policy. The biggest thing that I come into with my associations where I see a lot are either rented autos. Some organizations will rent an auto to either transport some of their equipment, or they'll rent an auto to take participants to a certain event. When you rent an auto, there's a coverage called hired and non-owned auto liability, and I usually add that to whenever I write general liability, I'll usually add automobile coverage, the hired and non-owned, because it will cover primarily for the hired autos. It will be primary coverage, so you get liability coverage for the auto that you're renting. It also provides non-owned auto liability, which is coverage, secondary coverage for people of your organization using their personal autos on your behalf. Now, this is a really important one to consider and something that I recommend that every policy have, because there's a lot of people that will use their personal autos for business for you, or running errands, or different things that somehow could tie back to your organization. And if you were to have someone driving a personal auto that had no liability coverage, there could be big trouble. And were not ever meant to provide this as primary coverage. So it becomes important that if you, as an organization, have people that drive their personal autos regularly on your behalf, you need to verify that they have insurance on their personal auto, and then our coverage would be secondary. I know of a loss that was quite sad. A gentleman, he was a famous writer, and his name escapes me, but he was needed a ride to get to the university or something, and he had one of the participants in the lecture that he had just had. A young guy took him to the university, and on the way there they were involved in a serious accident, and this gentleman was killed, and the student who was driving his car had just basic limits of liability. So they went back after the organization that had promoted the lecture, and everyone was sued, and they ended up paying some of this hired and unowned auto liability because the student did not have enough coverage on his policy for the injuries that were involved. So it's very important that if anyone in your organization is driving their personal auto on your behalf, that you verify that they do have coverage, and that you also have the hired and non-owned auto liability coverage form added to your policy. That's very important. So if general liability coverage, this is from Kelly, if general liability coverage includes event, in what situation should separate special event coverage be purchased? If you have a general liability policy in place and it's an annual policy, you should be able to call your carrier and tell them you're having an event, and they should be able to add a rider to your policy for the event. Now, I am under the impression that some carriers won't add events to their policy, and if that's the case, then you can purchase special event coverage. My preference as an agent is to write an annual policy, and then what I do is I will try to incorporate all of the events that you're aware of within the premium when we write the policy, and then if something else comes up, we can add it. So if you've got a general liability policy and make your agent aware of the events that you know of, that should be included as part of the policy. And then if for some reason they can't or won't write the event coverage, then you could purchase separate coverage. There's several carriers that write separate coverage for those. Okay, and then from Tricia, if we have a volunteer who leads one canoe trip for us in a year and drives someone back to their car after the canoe trip, we should verify they have personal auto insurance ahead of time. Yes, on an annual basis, what you should do is send a memo or some kind of correspondence around to everybody that drives on your behalf and ask them to provide you with a copy of their personal auto insurance. And I would do that on an annual basis. I know that can get to be kind of time-consuming, but it's very important that if they're representing you in any way using their personal auto, that you confirm that they've got insurance, because the insurance is going to follow the car, and you want to make sure that you don't have any uninsured drivers out there driving around on your behalf. Cheryl's question, does auto typically cover collision damage to the rental vehicle in an accident or property damage? Under this form, no. This form is just the auto liability. You can purchase coverage under an auto policy for the hired physical damage, but generally you have to own a vehicle for a carrier to write that type of coverage. So in other words, they have to be insuring your own auto, your commercial automobile, and then they generally will allow you to purchase the physical damage. But in most cases, I would say no, that coverage isn't available. Questions on auto? Bill, okay. Let's talk about umbrella. When I write an umbrella, we generally write that to extend the liability limits. We'll normally do this in the case of if the certificate holder or a contract is asking you for limits higher than what you got, higher than the $1 million, $2 million, we'll generally cover that by issuing an umbrella. And the umbrella just gives you excess limits over and above what you've got. And it can be important if the organization is a large organization and has a lot of assets. $1 million, $2 million may not be enough, so we would address that excess coverage through an umbrella. And that's what we would purchase to get the higher limits. So that's kind of a simple one. What's the next slide, Catherine? I really, they're just blank, but I can...
We just left umbrella. We're now to questions.
Any
Again,
questions
if folks have questions on umbrella. And then we move to workers' compensation coverage.
Okay. Workers' compensation coverage, I can speak about as far as what I know in the state of Utah. I know that every state has a different requirement for workers' compensation. In the state of Utah, if you have one employee that's paid, whether that employee is paid $5 or $100 or whatever, just by fact that they are a paid employee, it is required in the state of Utah that you carry workers' compensation coverage. Now, I've kind of, over the years, have had nonprofits tell me that they didn't think they had to buy that because they were a nonprofit, number one, or because they had payroll under a certain amount. Like I say, in Utah, it does not matter how many employees you've got or how much you pay them. You pay anybody, and you're required to carry it. So that's something that you need to be aware of, because in our state, if you're found to not be carrying workers' comp, the Labor Commission will fine you, and they'll fine you, basically they'll force you to get the workers' comp coverage, and then they will fine you the equivalent of what the coverage would cost or would have cost for the entire time that you've been in business. So it can be quite expensive, and it's something that you need to be thinking about. And again, each state has a different statute on that, but it's something to think about. It provides the coverage, the workers' comp policy obviously provides coverage for medical payments to an employee who's injured on the job. It does also provide some lost wages, so if I'm injured on the job, generally there's a little waiting period of like 2 days, and then it starts to kick in to provide wages, my wages for me while I am out of work. So I imagine everybody is familiar with that, and I don't know if a lot of you have employees or if there's a lot of volunteer staff. We've got a slide in here about volunteer accident coverage, but I'll mention now in the workers' comp realm, it's also tricky too. I know in the state of Utah, they will tell me, the Workers' Compensation Fund will tell me that they do not cover volunteers, and it's not their intention to cover volunteers. And generally that's because volunteers are not paid, and the premiums for workers' compensation coverage are based on payroll. So volunteers can be tricky. That may be another statute that your state has stating that they can have coverage, that volunteers can have coverage under the workers' comp, but that's something that you'll need to check as well. And when we get to the slide about the accident coverage, we'll talk more in detail about that. Does anybody have any questions on workers' compensation?
Yeah, you know what, Susan, I'll take care of moving the slides. We're on a question slide right now.
Okay.
Are you seeing chats?
No, I'm not.
Cheryl posted a question that asks, what about consultants on 1099s for workers' comp?
If they're consultants, you'll either need to have them carry their own workers' comp and verify that to you that they've got it. If they don't have their workers' comp, I believe you would probably be responsible for them. Any kind of independent contractor, you have the right to request them to carry their own workers' comp coverage or purchase a waiver. In Utah, they can purchase a waiver if they've got health insurance, medical insurance. They can purchase a waiver that will make it so that they don't have to provide workers' compensation coverage. But I would definitely, if I'm working with an independent contractor, I'm going to make sure that they've either addressed that through the state or somehow signed a waiver that you're not responsible for them. If not, independent contractors, I believe, can be added to your workers' comp policy and covered for the duties that they do.
And Terry wrote, solo consultants don't usually carry coverage because owners of companies aren't covered.
Yeah, they can waive it. If they're an owner of a company, they can waive that coverage. They also still can purchase the coverage on their behalf, but it does require that they get in touch with the state fund to have the waiver so that you know they've got coverage. So if I own a business and I'm a sole proprietor, I can either purchase the coverage on my own so that I've got it, or I go to the Workers' Compensation Fund and I waive that right. I say that I don't want it because I've got my own health insurance. It generally costs, in the state of Utah, it costs $50 for me to do that, but then they give me a waiver that I use to show people that I am responsible for my own coverage, that I've waived that right, and then they don't become responsible for me. I can see the questions now, Catherine.
Oh, great.
Any other questions about workers' comp? Pull this up, my slides. Well.
We're on volunteer accident coverage.
Okay. Volunteer accident coverage, I did want to talk about that in conjunction with the workers' comp coverage because it's, like I say, the workers' compensation, they have different statutes state by state as to how they would handle a volunteer. Injuries to a volunteer are generally not going to be covered under general liability because volunteers are looked at the same as employees. And so an employee isn't covered under general liability. Injuries to an employee are not covered under general liability because the employees have workers' compensation coverage in force. So it's similar. Volunteers are looked at similar. So what we will usually do with a volunteer is there's a coverage called volunteer accident coverage, and it provides medical payments only for volunteers that are injured while on your behalf, and it's regardless of negligence. So I've seen a couple of things happen on this. I insure a little community theater place, and they have volunteers that come on their set and help them with the construction of their scenery and different things. And they're volunteers. They've signed waivers, but one of the volunteers comes onto the set and injures herself, hammers her hand or something, and has a broken hand. Well, she has no health insurance, and she's got about a $1,000 bill for that hand. So she comes back to the insured and asks the insured to pay it. Well, luckily for us, the insured had a volunteer accident policy in place, and the policy paid for the injuries to this woman and took care of it. So the best case scenario with volunteers, I think that you always have them sign a waiver, but nevertheless, at the end of the day, they can sign the waiver and say that they hold you harmless, but if they're suddenly faced with maybe a $10,000 medical bill and they don't have health insurance, then they're going to look to you for some kind of remuneration. And so if you work with a lot of volunteers and there's a lot of activities going on, I strongly recommend the volunteer accident coverage because it's generally not very expensive. It's generally around $300 a year, and that pays for their medical payments regardless of fault, and pays generally up to $50,000. So that's something to consider when you're thinking about people that you're responsible for. Your volunteers is something to think about. And again, like I say, there may be some states that will allow you to include those on the workers' comp, which is fine. You just need to be aware of that. Because I just know from personal experience that waivers don't hold up in court. So that's something to keep in mind. Questions on that?
What was that? Can you explain that bottom thing on the things to consider?
Excess coverage or
It says,
primary?
yeah. What do you mean by that?
Well, what I mean by that is your insurance agent may not know that that can be considered to be excess or primary, and I generally write it primary because primary means it's going to respond first, even if you have medical insurance in place.
Oh, okay.
If it's written as excess, your insurance company would respond first, and then we would respond second. It's a way for people to save money because if it's excess, it's not as expensive as if it's primary. But with a group of volunteers, I don't know which of them have their own medical insurance and which don't. So I generally just I insure that as primary. Any other questions on the volunteer coverage? Okay, we'll go to the next slide, which is commercial crime coverage. Under the property coverage, there is no coverage for money, people stealing money, absconding. There's no coverage for that. Money has to be insured separately. So we'll usually write a commercial crime policy, or it's sometimes called employee dishonesty, that provides coverage for money that could be stolen due to dishonest acts of employees or volunteers. There's a couple of different things that they look at. Computer fraud is one of the newer things that's coming into play. People that are illegally transferring funds from one account to another, and anything to do with stealing the funds is something that it has to be addressed separate. And a lot of people don't think about money until it's gone. I think some people may think it's covered as part of your business personal property, and it's not. So this is for dishonest acts of your employees, and I am seeing an uprise in this type of loss in the past year. It's very important that the people that are handling your money, have controls in place, that you make sure that there's not just one person that's solely responsible for all of the handling of funds, that you've got more than one set of eyes looking at the transactions. Insurance carriers, when they quote this coverage, the application does ask very specific questions about what type of controls you have in place and how the money is accounted for. So where I've had probably 5 claims in the last 10 years or so, they can be pretty serious. They get into I've seen one where an executive director, very well trusted, had been with the organization for very, very many years and had been taking funds over the years, and they had never asked him for an audited financial. They'd really basically just trusted him and allowed him to continue to do that. And it became apparent, actually, it became apparent to me that something was going on, and I mentioned something to the executive director, and they did an audit, and he fought the audit, but at the end of the day, they were successful in doing the audit, and he had taken over the course of several years about $50,000. So they had no coverage in force to cover the money because he was very well trusted and had been a part of their board, and so they didn't have the coverage. They pressed charges, and he ended up going to jail, but it did not bring the money back. So in absence of commercial crime coverage, there needs to be really strong controls in place to kind of provide coverage in the event that something like this happens. It's not generally outrageously expensive for this coverage. It's fairly inexpensive depending on the types of controls that you have in place. But this is one that's often overlooked, and I feel like it's becoming more and more important as time goes on because it's happening more. People are finding that they can take some money, and if they don't get caught, then it starts small, like maybe taking money out of the till, and then it gets bigger from there. So that's something to consider too. I have found over the years that a lot of donors who are making big donations will require this coverage. They will want proof that you've got this coverage in place because they want to make sure that their funds are earmarked and taken care of for what they expect them to be. So that's crime. Catherine, I've got my other one up that I can scroll through. It doesn't affect you, so I'll just let you continue to change.
Perfect.
Okay, no questions. We'll move on to the next slide, which is business income and extra expense. This one I'm touching on just for a very brief moment. It's generally tied to the property coverage, but it's something to think about. When you have property coverage, and if you were to have a covered loss due to a fire or some sort of thing, and your building or office was rendered untenantable, we would sell you coverage called business income and extra expense. And what that does is it pays the actual loss of your business income that you would have lost by being out of business. It will replace the income. Say, for instance, you have a fire and you're out of your building for 6 months. This is going to make sure that your income for that 6 months that is lost is reimbursed to you so that you don't suffer a financial loss because of the fire. It also can provide extra expense coverage, which will help pay the expenses to set up a temporary business while you're waiting for your building to become habitable again. So it's a lot of the policies that I write. When I write a business owner's policies, oftentimes this is automatically included as part of the policy, but it's something to consider and ask your agent about, because if you're out of business for a while because you can't get into your building because it's been burned down, you need to have some kind of a source of money to set things up while you're waiting to get back into the business. This would pay for temporary phone lines, rent for a new office space. It will pay your salaries if your payroll can't be met because you don't have an office. This is going to pay all of your continuing expenses until you're back in business, back in your building, and ready to start fresh. So this can be an important coverage. Most people don't really think about it or worry about it. And truthfully, in all of my time doing this, I've had to use this maybe once or twice when it has been severe damage. I had one organization that was a homeless shelter, and they had one of their clients had smoked meth in their building, and the Board of Health shut them down, and they were shut down for 6 months while they had to go replace all of their appliances and everything inside the shelter because of the contamination from the meth. And the insurance company paid. They had to put new carpet in, everything. They had to repaint. They basically paid all of the costs to repaint, redo those buildings. They paid their payroll expenses, and it did take 6 months for them to be able to get clearance from the state so that they could move back in. So I've seen it in occasions, and generally it happens when it's a big loss or a big organization that could suffer something like this. But it's a very good thing to be aware of and know, because it's not generally an expensive coverage, and sometimes it's included just as part of your regular insurance plan. Questions about that? While Tricia is typing, I will say one thing that I didn't mention in the general liability, and we'll talk more about this on our last slide, which is directors and officers liability. A very key and crucial component for insurance coverage is defense costs. And I'll preface my going into the directors and officers liability by saying people will sue for any reason. People will sue for no reason. People will file lawsuits for frivolous things. Defense is huge, because if you have no insurance and someone files a lawsuit against you, you have to provide defense. And that it's somewhere in the range of $2,500 just to depose someone, and I've also heard that the average cost to defend a claim is about $50,000, whether they're successful in winning the claim or not. That's just what it costs to defend it. So keep in mind as you think about insurance coverage that the coverage itself, the amounts that they're going to pay out for the injuries and the damage is one thing, but the defense cost is a whole different thing, and that can be sometimes higher than the actual payout. Okay, Tricia writes, not sure if you'll cover this, but I have a question about signs. Is it helpful to post a sign near a canoe dock saying, caution, use at your own risk, or along a cliff saying, caution, persons walking cliff edge, do so at their own risk, or do signs just add visual pollution without providing extra protection? My idea on signs is that they make them more of an attractive nuisance. People should know and have some of their own care in walking near cliffs and things like that. I think you need to make those areas as safe as you can. If it's a cliff and there's any way you can put a fence or a guide rail or something, that's one thing, but signs are generally frowned upon from my experience from an insurance standpoint because it calls attention to it and brings people over close enough. If I'm having to go close enough to look at that caution sign, I may topple off. So I think a lot of times signs are just more of an attractive nuisance. So that's my take on it. I think it's just the thing that you have to think about is providing as many safety features as you can, but warning people that there's a risk there does not generally work. And I would ask your agent what he says about that. I have had insurance carriers tell me it points it out more. If you put a sign, it brings more attention and brings more people that could possibly be injured than just assuming that people will do care and caution because they're by water. So that's my thought on that. Okay, we will jump into directors and officers liability, which is probably one of the main topics. That's one of the things I sell the most of, one of the things that I really talk a lot about it. It's a simple coverage, basically. It's two-pronged. There are two coverages that we generally sell with directors and officers liability. The directors and officers liability is sometimes referred to as errors and omissions. It's basically provides coverage for things that are other than bodily injury or property damage that are caused by the governance of an organization. So decisions that are made, people making decisions on behalf of the organization, this is where the D&O coverage comes in. The second component to D&O coverage is employment practices liability. That provides coverage for types of claims such as wrongful termination, harassment, and discrimination. And it's somewhat misleading when you hear the term employment practices liability because generally these kind of claims are alleged by employees of the company. But in the case of the nonprofit world, it can be alleged by a volunteer board member, by any volunteer for that matter, a trustee, a committee member. Anyone could claim harassment and discrimination. I have had cases where people have been asked by the board to leave the board, and then they filed a wrongful termination lawsuit for being asked to leave the board. So I'll tell you right now, probably about 90% of all D&O claims that I've seen filed have been filed under the employment practices liability, and they're generally alleged by volunteers. So when you hear that term, you need to not think that, well, I have no employees, so I don't need that coverage. There's some very specific coverages that you get from that form, and so that's something that needs to be considered. D&O coverages are written most often, the ones that I insure will have defense costs outside of the limits, so that means that if you have defense, they're going to pay the defense separate from the judgment. So if you have one that's $1 million judgment and it costs you $1 million to defend, they will pay the defense separately, and it will not reduce the $1 million that's there for the loss. So that's something that you'd want to consider in your policies to make sure that you know if your defense costs are inside or outside of the limit. It's very basic coverage. I think a lot of people, when we first started talking, general liability is something that every organization needs to have. If they're offering services, if they're out in the public, if they're doing anything that their name is out there, they need to have they need to have general liability. Some people feel like if they've got directors and officers liability, that's going to take care of them, but it won't. And most D&O policies will have an exclusion in them for general liability, for bodily injury and property damage. So having the D&O doesn't necessarily protect you against a general liability claim. And Anna says who would be covered as an insured. The policies that I write are very, very broad in their definition of an insured. They're meant to cover employees, volunteers, committee members, directors, officers, pretty much anyone that works on behalf, has any kind of decision-making capacity on behalf of the organization. So it's meant to be very broad to cover anybody that is working on behalf of the organization. And we do have the product that we've got for members of the River Network, and it's very, very competitively priced, as low as $550 a year. And the components that they use in rating the directors and officers' liability, there's two things that they look primarily at, is the value of the organization's assets and then the number of employees and the annual payroll. So those are the factors that they use in determining the premium. In the nonprofit world, because, like I said, about 90% of the claims are paid under the employment practices liability. And in the nonprofit world, I write a lot of really small nonprofits, and so they don't have a lot of employees, and so that's why we're able to get the premiums down, is because there are several, or there's a big percentage that have few employees. It's not like writing the big ones with hundreds of employees. So that's one way to be able to keep it down, and that's the components that they use for that coverage. Other questions?
I have a question about the D&O, and maybe I'm mistaken, but it seems like I've heard a lot of people say that one of the purposes of that is actually to protect the individual officers. Like if you've got somebody on your board who's really wealthy, it prevents them from being sued.
Nothing can prevent anybody from being sued.
Right.
This is the whole concept and point behind D&O. People sue for no reason. They will file a lawsuit just to make you mad, and the first thing that happens when there's a lawsuit filed is someone has to defend. Now, if you've got a D&O policy, the D&O policy is going to start to defend immediately. They're going to defend. They're going to pay a judgment. If there's no D&O coverage in place, then they're going after that wealthy board member because somebody's going to pay. And so, to me, the defense becomes monumental in a D&O policy because you may have very limited risk. You may not be doing anything that's controversial or anything that would bring someone to file a lawsuit against you, but it could be they can file it for no reason. Even if you're not doing anything wrong or anything bad, they'll file a lawsuit, and somebody has to defend. As soon as there's a lawsuit filed, somebody has to start paying those defense costs. So, yes, they will. If I will tell you now, I would never sit on a board that didn't have D&O coverage, and I wouldn't let my husband sit on a board without D&O coverage because I've seen some of these claims and these things that people will file, and it generally they have no merit to them, but the insurance companies end up paying. I had one, truthfully, they paid $50,000 on that claim, and it was frivolous, and just the defense cost to get it refused or to deny the coverage was $50,000 that the insurance company had to pay. And if there was no insurance in force, somebody else would have paid it. One of these volunteer board members would pay it because you have to provide the defense.
Yeah, I completely agree with the litigation in our society, but it sounds to me that obviously the two biggies are to have the commercial general liability and the D&O, and that at least you've got the defense.
Right.
And the one Yeah, because the one is, you know, like I guess you said, the bodily injury and property damage, and then the other one's really kind of the employment
Right.
practices, like
And the
you said.
governance.
So, yeah, I learned something there. I wasn't really, we've always had the D&O, but I've misunderstood what it covered.
Yeah, yeah.
To tell
And
you the
like I
truth.
say, the important thing that I've seen in all the years I've done this is the defense. And I've seen hideous claims that never should have happened, and I've seen the defense just go up and up and up. And when you start to look at it, $2,500 is about what they charge to depose someone. They start deposing several people. If you thought of having to pay those costs out of your own pocket, or to have one of your board members pay it out of their own pocket, that's frightening, because that gets into a lot of money really quick. And
Yeah.
that's why, you know, it's important. They're not that much money anymore. There are ways that you can reduce costs. Some of the things on the general liability, we talk about your risk, and there's ways that you can get it for less money. And so it becomes, sometimes people don't want to spend even a little amount of money on insurance because they don't think that what they're doing is risky. But all it takes is someone getting a disgruntled community member filing a lawsuit, and you start into all of a sudden seeing how important insurance coverage is, because defense is so expensive.
All right, thank you.
That's basically the end of my slide presentation. Were there any other questions? I think, Catherine, or you probably have my contact information on the first slide, so if anyone has any questions. I will send Catherine some waiver examples, a couple of different things that you might find helpful, and then she can pass those on to you.
Yes, thank you, Susan. I will include your contact information in that email, as well as a nudge to encourage folks to fill out a very quick evaluation of this webinar.
Okay.
But thank you very much, Susan. I greatly appreciate it. And yes, Sarah, I will include slides. So if you have questions, feel free to contact me directly. I will get you in here, hopefully within the next hour. But thank you all very much. Greatly appreciate it.
Thank you.